Welcome to the Deep Dive. We take your complex source material, unpack it, and give you just the essentials. Fast, thorough, you know the drill. Today, we're looking at a really interesting one, B3. And the thing is, when we started digging into the sources, we found, well, two completely different stories, both using the name B3. On one hand, there's B3, this huge regulated financial player in Brazil, think derivatives, stock exchange stuff. And then there's B3, Web3 gaming ecosystem, totally different, built as a layer 3 on Base.
Yeah, it's actually a fascinating split. You've got like the old world of finance adopting crypto assets, and then this bleeding edge tech trying to build something completely new for consumers. So our mission today is pretty clear. First, untangle these two B3s. Then we'll really dive deep into the crypto B3, look at its gaming tech, how it scales this community funding idea, and their overall vision. After that, we'll circle back to B3 Brazil just to give it context against that institutional backdrop.
Okay, let's start with the gaming side then, because the origin story, well, it's got that Coinbase DNA all over it, right? This wasn't some random startup.
Absolutely. That's a super important context. It came out of NPC Labs, founded by ex-Coinbase people, key members of the crypto native team. Yeah. These folks were involved in launching Base itself, Coinbase's layer 2, and also Coinbase NFT. So they really understand the challenges of bringing crypto to, well, normal people.
Right. They saw the plumbing firsthand. But Base is meant for all sorts of things, so why build a whole separate thing just for games? Why not just use Base?
It actually came straight from the data they were seeing at Coinbase. They looked at how their, 100 million plus users interacted with notifications in the app. And whenever they pushed out something about a game you could play on-chain, the conversion rates just exploded, like shot up through the roof was the quote. Way higher than for DeFi or art or, other stuff.
Huh. So people just get games? It's less intimidating than finance, maybe.
Exactly. Everyone understands playing a game. It's familiar territory, much lower barrier to entry than trying to explain yield farming. Right?
Yeah.
So the team realized, look, if we really want crypto to go mainstream beyond just trading, gaming deserves a fair chance at winning. And that meant it needed its own dedicated space, its own infrastructure, not just bolted onto a general chain.
Okay, so let's get into that architecture. B3, the crypto one, is a layer 3 and L3. For listeners maybe not tracking all the layer wars, what does that mean practically? It sits on Base, which is the L2.
Right. Think of Base, the L2, like a big highway connected to Ethereum, the main road, layer 1. Base is already faster and cheaper than Ethereum for most things. B3 as an L3 is like building a dedicated express lane on top of that highway, specifically for one type of traffic. Games. Get security from Base and ultimately Ethereum, but it's optimized purely for, game transactions. Speed, volume, low congestion.
Okay, that makes sense for the user experience, but the really interesting part seems to be how they scale for developers, these game chains. I heard even on Base, developers can run into issues with block space, right? Even if fees are low.
That's the absolute core problem they're solving. Okay. Look, for a typical app, maybe paying a fraction of a cent per transaction is fine, but a game, you could have millions, tens of millions of tiny actions happening every day, moving items, scoring points, character state changes.
All needing on-chain updates.
Exactly. And if that game developer is constantly fighting for space on the main L2 highway against like a huge NFT mint or some massive DeFi trade, their game's transactions might lag, or the cost, even tiny costs, just pile up. It becomes unsustainable fast. So B3's solution is this horizontal scaling using app chains or game chains. Basically, they let a game developer launch their own L3 tailored just for their game within the B3 ecosystem.
Like giving them their own private road instead of sharing the public one.
Precisely. You get dedicated block space, guaranteed speed, predictable performance, and crucially, it lets the developer offer gasless play. They just absorb the tiny background costs themselves, making it totally seamless for the player. No wallet pop-ups for every little action.
That sounds huge for adoption.
Yeah.
Now, they're also using other tech to handle costs, specifically Celestia for data availability, or DA. Why bring in another piece like Celestia? What does that do?
Yeah, that's about planning for the future, sort of future-proofing the cost structure. Data availability is basically proving that all the transaction data, who did what, who owns what item, is actually available for anyone to check. Normally, you'd have to post all that data back down to the L2 Base or even L1 Ethereum, and that gets expensive, especially if you have massive amounts of data.
Okay.
So imagine one of these B3 games really takes off, like Web2 scale. Millions of daily players. Posting all that game data back to Base could suddenly cost a fortune, maybe millions a year. Celestia offers a specialized, much cheaper way to handle just the data availability part. It's orders of magnitude cheaper. So B3 can onboard games without worrying that massive success will suddenly make the settlement cost totally unaffordable. It keeps the whole model viable long term.
Wow, okay. Smart technical choice. Let's shift gears a bit to the platform itself, the consumer side, BSMNT.fun. I saw the inspiration wasn't slick stuff like Apple Arcade, but more like old school web game sites.
Yeah, exactly. Like Miniclip, addictinggames.com. Remember those? Just load up and play. That's the vibe they're going for. BSMNT.fun is their main place to find and play games. But here's the key thing. It's not just for games built on B3. They call it a discovery surface for pretty much all on-chain games.
Oh, interesting. So they list games from other chains too, like Avalanche or ZK Sync.
Yep, which is really smart strategically. It fights against that closed loop problem you see a lot in Web3 where each chain only promotes its own stuff. They seem to get that for Web3 gaming to win, the whole category needs to feel legitimate and discoverable, not just their little corner.
That makes sense. And who are they trying to attract developer-wise? Not the big Ubisoft types, I gather.
No, definitely not aiming for the AAAs right now. Their sweet spot is the indie developer scene, especially in places maybe overlooked by traditional publishers like Southeast Asia, Eastern Europe, the Middle East. These are often really creative teams that just don't have access to the big funding rounds or publishing deals needed to launch traditionally.
Right, and B3 removes that huge infrastructure cost barrier we talked about, potentially saving them millions a year.
Exactly. We mentioned those figures like $3 million to $5 million annually just to run your own dedicated chain infrastructure. B3 basically provides that environment, letting these indie devs focus purely on making a fun, innovative game, not on raising huge amounts of capital just for servers.
And they fund this partly through the community, using the B3 token. Tell me more about how that works. It sounded a bit like crowdfunding, but with a twist.
It's a really neat model, yeah. Think of it like a decentralized investment pool for games. Yeah. People in the community who like the sound of a game project can use their $3B tokens to help fund its initial costs, the infrastructure setup, maybe some early marketing.
Okay, like a Kickstarter or GoFundMe?
Sort of, but with a key difference in the payback. The community members who chip in don't just get like a special skin or something. They actually get 50% of that game's revenue paid back to them until their initial $3B contribution is fully returned.
Oh, wow. So they get their money back first.
Yeah, they're made whole, and after they've been fully repaid, they still continue to receive a share of the game's revenue, just a smaller percentage. So they go from being sort of lenders to being long-term partners who benefit if the game is a lasting success. It aligns everyone's incentives, the devs, the players, the funders.
That is clever. But okay, the potential critique here.
Yeah.
If you're relying on community funding, not giant VCs, does that mean the games won't be as polished? Is there a quality gap compared to mainstream games?
They address that head on. They know they're not going to compete graphics-wise with, the next Grand Theft Auto right out of the gate.
Probably not.
But they argue that's not the point. They're optimizing for novelty. They're looking for the next Minecraft. Remember when Minecraft first came out? Graphically, it was super basic, but the gameplay loop, the systems, it was totally new and it changed everything. So B3 is betting on funding those unique, maybe quirky, decentralized ideas rather than just prettier versions of existing games. And importantly, they're trying hard to avoid the mistakes of early Web3 gaming, those play-to-earn or P2E games that felt more like financial schemes than actual fun.
Right. The focus is fun first, token second.
Exactly. Fun first. The token is there for utility, for funding, for governance, not just as the main reason to play.
And it seems to be working. What kind of traction are they seeing?
The numbers are pretty solid, yeah. Sources mention around 6 million monthly participants across the ecosystem, maybe 100,000 daily players, and over 150 games supported. That's starting to feel like a real ecosystem.
That's significant scale.
And they're going for mobile too. A mobile app is apparently in review with Apple, aiming for a Q2 2025 release.
Yeah.
Getting onto mobile easily is sort of the final boss for user friction in crypto, so that'll be key.
Okay, so before we jump to the other B3, let's just quickly recap the $30 tokens job in this gaming world.
Sure. So besides that cool game funding mechanism, the $3 token is used for a few main things. Paying transaction fees on those specific game chains, voting in governance for how the ecosystem evolves, staking for network security, and being the fuel for that community funding model.
And it had a decent launch.
Yeah, the TGE token generation event was back in February 2025. Apparently did quite well. Price jumped like 5 times, hit almost 2 cents, 0.0197. They apparently made a big effort beforehand to filter out bots and airdrop farmers, trying to get it into the hands of actual users.
Okay, good context, right? Let's do the pivot. Complete change of scene. B3, Brazil, the institutional giant.
Yep. We're stepping out of the Layer 3 dev studios and into the regulated world of the Brazilian stock exchange. B3 Brazil. It's the biggest market infrastructure in Latin America. And their significance here is how readily they're integrating established crypto assets into the traditional financial system. They're kind of a benchmark for how institutions globally are approaching this.
And it's not just dipping a toe in, right? They're offering more than just like one Bitcoin product.
Oh yeah, way more. As of mid-2024, they were offering, get this, 14 different crypto ETFs, exchange-traded funds.
14, wow.
Yeah, and these aren't obscure things. Some were top performers, like HSH, HiACH11 sources said they saw returns near 70% over 12 months. That tells you there's huge demand, both institutional and retail, for regulated ways to get crypto exposure in Brazil.
Okay, ETFs are one thing, but the really big signal for institutional adoption is usually derivatives, isn't it? Options, futures, are they doing that?
They absolutely are. That's the crucial step. In 2024, they launched options on Bitcoin and futures contracts on both Ethereum and Solana.
Okay, ETH and SOL futures too.
Yeah, right. And derivatives aren't just for speculation. They're essential tools for sophisticated players. Hedge funds, big companies, they need ways to manage risk, hedge against price swings, especially if they're dealing with crypto in their operations or portfolios.
So it makes crypto feel like a more normal asset class for them.
Exactly. And the market reaction was huge. The Bitcoin futures volume apparently hit $860 million in trading in just 1 month. That kind of volume shows crypto isn't just seen as, digital gold anymore. It's a proper asset class you can build complex financial strategies around within the regulated system.
So B3 Brazil is positioning itself not just as an exchange, but as like the core digital infrastructure provider for finance in the region.
That seems to be the strategy. They're focused on data, analytics. They bought a company called NeoWave for that and building out infrastructure, things like custody solutions, tokenization of real-world assets, offering crypto as a service to banks and other clients. They're betting big on using digital assets and blockchain tech to modernize everything.
Okay, so we've definitely got the two sides now. B3 Brazil, the regulated heavyweight, bringing assets like Bitcoin and Ether into the institutional fold with ETFs and derivatives. And B3, the crypto native, using Layer 3 tech, focusing on games, community funding, trying to build new user experiences from the ground up.
Yeah, the contrast is really stark, isn't it? One B3 is all about financial efficiency, risk management, regulation. The other is about decentralization, speed, performance, and trying to deliver actual fun, avoiding those extractive P2E models that gave Web3 gaming a bad name early on. It really shows the two paths crypto is taking right now.
It really does. And it makes you wonder, where does the real deep innovation come from? Top-down acceptance or bottom-up user demand? We talk a lot about the economics, but maybe we should end with that foundational story connecting crypto and gaming.
The Vitalik story, yeah.
Exactly. The sources remind us, right? Vitalik Buterin, Ethereum's co-founder. The story goes he was partly inspired because his World of Warcraft character got nerfed. The game developers changed his character's abilities without his say-so.
That feeling of powerlessness, right?
Yeah, that frustration, that lack of control over his digital stuff apparently pushed him towards thinking about systems where users do have real ownership and control, decentralized systems.
It's such a powerful symbol, that fundamental desire for sovereignty, whether it's over your game character or your finances. That's what drives so much of this tech. Gaming wasn't just some random application. It was kind of there at the philosophical beginning.
So there you have it, D3, a name that means institutional finance in one corner and cutting-edge, decentralized gaming in the other. You've got the full picture now. Go deep with it.
We'll catch you next time on The Deep Dive.